Thank you for joining us for the Weekly Forex Outlook at xm.com. We'll be taking a look at upcoming US and UK data and how they might impact the dollar and the pound. In addition, we'll discuss the risk-linked Aussie and Kiwi and how these currencies may react to GDP data coming out of China. I'm Maria Bachurdes, and joining me is Senior Investment Analyst Haralambos Pissouros. So Haralambos, let's start in the US, where we got recent CPI data that revealed headline inflation did not slow as expected. Now on Tuesday, we'll get retail sales numbers for September. What are we expecting there, and what reaction might we see in the dollar?
Hello, Maria. Yes, indeed, the CPIs proved to be a helping hand for the US dollar, which was on the back foot for most of the week this week, until we got, of course, the data yesterday. The reason behind the latest slide in the US dollar was dovish remarks by Fed officials who argued that the surge in Treasury yields has done a lot of their work, implying that another hike may not be necessary. However, yesterday's hotter than expected CPI numbers prompted investors to bring hike bets back on the table, and that's why the dollar rebounded. Now, for next week, besides retail sales, we get some housing data, but also several speeches by Fed officials. It will be interesting to hear what they have to say after the CPI, in the aftermath of the CPI numbers. Now back to retail sales, both the headline and core rates are expected to have declined, while the housing numbers are expected to continue indicating that the sector is cooling down. This may result in another setback in the dollar, but with the Atlanta Fed GDP now model being revised up to show that the US economy has expanded 5.1% in the third quarter, I believe that the slide in the dollar may be short-lived. The hit is unlikely to be strong, especially if Fed officials start talking about the possibility of another hike due to the hotter than expected headline inflation. Personally, I believe that the dollar bulls may see any setback as an opportunity to add to their positions at more attractive levels.
Okay, turning to the UK now, we'll get the employment report for August on Tuesday, the CPI figures for September on Wednesday, and retail sales data on Friday. Is any of this data likely to increase the chances of the Bank of England hiking one more time this year?
I think for that to happen, all the data sets we get next week need to point to that direction, to corroborate that view. What do I mean? At the moment, the only data point corroborating more interest rate hikes by the Bank of England is wage growth, which remains elevated. All the other indicators keep painting a gloomy economic picture, and inflation has been coming down faster than expected, which combined with the Bank of England's choice to stand pat at its latest gathering, made investors believe that there will be no more hikes this year. They are assigning only a 22% probability for a hike at the November gathering, although they see a higher 55% chance for one last quarter point hike to be delivered in March. Therefore, for the probability of another hike this year to rise substantially, not only wage growth should stay elevated, but also the CPI data may need to indicate that inflation is stickier than previously thought and retail sales need to accelerate.
And finally, on Wednesday, we'll get China's GDP for the third quarter. How might this data impact the Aussie and Kiwi? What should traders look out for?
China's GDP is accompanied by the industrial production, retail sales, and fixed asset investment figures, all for September. If these releases corroborate the view derived from other recent Chinese data that the world's second largest economy is stabilizing, then we could see the Aussie and the Kiwi gaining some ground. However, traders of both those currencies need to pay attention to domestic data as well. From Australia, we get the employment report for September, while from New Zealand, we get the CPI numbers for the third quarter. A still tight labour market in Australia and sticky inflation in New Zealand may increase the chances for one last hike by both the RBA and the RBNZ. And that could happen at the turn of the year, of course, because the probabilities now assigned by the market for this year are very low. Currently, investors assign a more than 50% probability for both central banks to act by May.
Harlambos, thanks so much. This was the Weekly Forex Outlook here at XM.com.